right, let's actually get that flow picture straight up, right? Cameron Brandt is with us now, Director of Research at EPFR Global. Cameron, would you agree with that? And what have you seen in terms of flows actually coming in last week? And just put that in context for us. India through GEM funds and India dedicated.
So India is probably the pick of the bunch at the moment in terms of emerging markets. Certainly sentiment towards individual markets, but it's fairly subdued flows coming principally from dedicated funds. So when people do seek Indian exposure, they're going for India exposure rather than through the diversified GEM funds. Japan, not so much. Certainly, we haven't been seeing those flows. Flows for Japan have been fairly choppy for a while. Last week, we saw pretty big outflows. Japan is squarely in the sights when it comes to angst about fiscal discipline, which is having one of its rearing its ugly head, at least for the moment. So of the two, India certainly had the more positive flows over the past 2 months. Japan was, certainly in the picture there or thereabouts, but concerns that there will be some kind of bond market revolt that keeps interest rates high is definitely weighing on Japanese funds at the moment.
Cameron, hi. Great to be speaking with you. So, what's the sense? Because flows that have been coming into India so far, it's been a patchy picture. It's not like there's a tsunami of dollars flowing in. It's kind of one day up, one day down. What's the sense that you get as some of these trade issues roll on?
So the sense is exactly what you just said, that there's limited appetite for emerging markets at the moment until the overall trade picture becomes clearer. Sort of within that fairly uninspiring context, India is frankly doing the best, though there is some positive sentiment towards Latin America that's been evident in the past couple of weeks. And until the dust settles, that's probably how it's going to continue. The focus at the moment is very much on fixed income markets, the recent US downgrade, the less than stellar sovereign bond auctions that we've seen over the past 2 weeks. So flows. The energy is in the fixed income space at the moment.
All right. Hi, Cameron. Good to see you in as always. Cameron, what about the flows to the United States? They were the only game in town just around 3 or 4 months ago. But are you seeing outflows from the U.S. market?
Modest outflows, but yes, sentiment is certainly very flat. We seem to be seeing, frankly, a plague on both houses in terms of the biggest element of the trade dispute picture, which is the U.S. and China. So both U.S. and China equity funds have seen consistent, though not spectacular, outflows now for the better part of the period since Trump stood up and announced Liberation Day. Within that, there's definitely some shifts. We are seeing a lot more appetite for dividend funds on the U.S. side, certainly. And when the stars realign, the money does rush back in. But so many of the stars are out of their orbit at the moment that it's hard for people to really recommit to the U.S. at the moment.
That's a nice way of putting it. Stars are out of the orbit. Stars are going all over the place, including, Harvard University, China, Europe. There's so much going on, right, in terms of all the action. Cameron, thank you very much. Good conversation. We'll leave it there for this morning. Thanks for joining in.